Hello, this is Paul Gibson with Academy of Trading and Investing once again. I'm one of the co-founders of this service. It's a new service that we have designed to help people like you learn how to invest. In today's conversation, we'll be learning how to build a stock charts analysis feature on your website that will allow you to be able to do your technical analysis much more efficiently. This is designed to help you know when to buy and when to sell. That's the objective of today's lesson, is to help you understand how to set up your chart. My purpose here is to help you learn how to invest. I have 20 years involved in learning how to invest, more than 20 years actually. I started investing in 1975 or 76, can't remember exactly which one, and got much more involved when the internet got more active back in 1999, and I've been studying the art of investing in the stock market since then. You're going to learn how to do this in a much more brief period of time. You'll be able to take advantage of my knowledge and experience in your own process that may take you a few hours to learn, whereas it took me over 20 years to learn all these concepts. I'd be glad to help you anytime along the way, by the way. We have a function called coaching that would be available to interested investors that would like to learn how to do this with some support in the background. But anyway, let's continue with today's conversation. We're going to learn the process of learning how to set up a chart. This chart, as you can see, is from stockcharts.com. When we go to stockcharts.com, we can type in a ticker symbol. We can type it in here, or we can type it in over here. Either one works. That will bring up our chart, as we discussed in Conversation 1 or Basics 1, a chart that looks very similar to this. These are candlesticks, as we discussed in our first Basics discussion. Today we're going to learn how to set up what we call the oscillators and indicators to help us be able to analyze what these candles are telling us. We can see them going up and down, but what we want is some predictability. And these other oscillators and indicators will give us some statistical probability functions that will help us know when to buy and when to sell a stock. So we'll start by scrolling down the screen to find the section that says Chart Attributes. To begin with, we want to make sure that we focus on the period of daily. Now in the free section, this can be a daily candle or a monthly candle. For our purposes, we'll focus on daily for now. Then we can leave the defaults as they are in the rest of the section. All of these should be defaulted to look like this. When we're finished changing whatever we want to change on this, we then click the Update button, which then updates the chart to be the version that we want to see. So go ahead and click that Update button when you're ready. Now, in this next section called Overlays, these particular indicators appear as an overlay on the stock price chart itself. So we'll begin with some basic defaults. The defaults that come up in stockcharts.com are simple moving averages. The first one is a 50-day moving average. The second one is a simple moving average of 200 days. These should be defaults. If not, you can click on the pull-down menu and change these defaults to these simple moving averages. The one that I like to focus on as the third moving average is called the Bollinger Bands. This is a statistical analysis tool that helps us identify what the probability of a stock price movement is in terms of what the high price is going to be, or has been anyway, and what the low price has been and possibly could be. When we're finished with that particular overlay section, it should look like this. 50-day moving average, 200-day moving average, 20 days for the averaging for Bollinger Bands with a standard deviation of 2. If you understand what standard deviation means from your statistics classes, it means that the values of our sample will fall within 92.8% of the time within those bands. Once again, then we click Update, and that makes our chart look like this. In the upper left-hand corner, we see what our settings are. We have the 50-day moving average, the 200-day moving average, the Bollinger Band set up for 20 days and 2 standard deviations, Bollinger Bands in green, moving average 200 in red, moving average 50 in blue, Here's the moving average for 50 days in blue. The red is the 200-day moving average. This is a long-term perspective. We can see in general over the long term that GE stock prices have been coming down. With the blue moving average, 20 days, it's been going down and then back up again, which eventually will change the red moving average, the 200-day moving average, to also go up. But for now, we see the long-term trend has been to go down. The Bollinger Bands are these green lines. Now, a very interesting moving average is 20-day moving average, which we'd like to see on our chart. But by default, as we see here, the Bollinger Bands has a 20-day moving average to collect this data from. So this dotted line in the middle, which is green, is our 20-day moving average. Then these two lines represent the boundaries of our 92.8% probability. In other words, 92.8% of the time, the stock price should fall within these two lines. As you see, sometimes the stock prices get outside the line. And sometimes we see that the stock prices are actually below the line. Now, in simple parlance, when the stock prices are above the line, we suspect that these prices will want to come back in within the line. One of my mentors explained to me that the candles are like a little caveman. He wants to go down the river. The green lines represent the banks of the river. He wants to be in the middle all the time. This is his designed path. But as you can see, he gets outside from time to time. So when he's outside the Bollinger Bands, he wants to come back towards the middle. And this would be a great sell signal. In other words, we know that the stock prices are probably going to come down after this. When the prices are below the Bollinger Band, we know that they want to go back towards the middle, so that might be a good indicator to buy. Now, this is not the only point of information we want to make a decision on. We'll look at several, but this is one indicator that can be sort of one of the votes in our jury to tell us what to do. Once again, our indicators are over here on the left. And as we finish, our setup should look like this: the RSI, MACD, and fast stochastic. We want to pull that up from our pull-down menu, and as you'll see when you do the pull-down, there'll be many selections there. We can also select as to where we want to see those indicators. In this case, I have chosen to see the indicators below our stock chart. When we're finished, a stock chart looks like this. We have our overlays here, and we have our oscillators, or our indicators, below. This is the RSI, this is the MACD, this is the fast stochastic. In our future presentations, I will go over what those mean and how to use them. So our next presentation will be Basics 3, where we'll go over the interpretation of the overlays. In Basics 4, we'll delve into the meanings of the different candlestick patterns. We'll bring in some more of those, which are kind of fun. These were developed by the Japanese analysts, and they're kind of fun patterns with exotic names. And each type of pattern has a different meaning and a different indication for future stock price movements. In Basics 5, then we'll explore some additional overlays and oscillators that may be helpful to you that are not standard. The ones we've addressed today are pretty standard and used by most analysts. So once again, if you would like some additional information, you're welcome to go to www.academyofti.org/free tools. Look at the free tools. If you'll sign up with your email address, that will allow you more access to the website, free access, by the way. And if we have your email address, we'll be sending you a newsletter from time to time with some additional information about the stock market and some helpful notes and tools. Also, if you'd like a little more in-depth study to build a stronger background, you're welcome to purchase the book called Notes from a Profitable Investor. That's found on the Amazon website as well as on the academyofti.org website. This is a powerful book that gives you a great deal of depth into investing. Anybody should be able to read this book. It's written for the layman. The professionals will also be able to understand it as it brings in some professional concepts like statistical analysis. Well, it's been a pleasure for me to be with you today. We'll look forward to seeing you in Basics 3. Let us know if we can help you. Contact us through academyofti.org, and we'll be glad to have a conversation with you. We'll look forward to talking to you another time.